Thank you, David, and hello, everybody. Prior to start, I would like to briefly and quickly introduce myself. My name is Luca. I'm a marketer by trade, I would say, and I'm currently pursuing a PhD at University of Worcester, working on the investor behavior in the context of equity crowdfunding. So today we'll be seeing something, related to this aspect. Part of what I would be saying, it is related to my research, actually. So about the topic is exploring how entrepreneurs can make the most of communities in the context of online venture funding, and in particular in equity crowdfunding. So I will be introducing equity crowdfunding quickly, prior to move on to explore briefly what the role communities can play in that kind of context, how entrepreneurs can make the most of it, how communities can make the most of that entrepreneurial journey as well. So I will propose you an holistic approach by exploring a business case, using a business model canvas, basically a strategic tool used by startuppers to build their business models. And I will add some direct quotation by the entrepreneur, which will constitute our business case, in order to deep dive in his experience and have a sort of scan of what's going on in the funding process. So, first of all, equity crowdfunding is a type of crowdfunding. Crowdfunding is nothing new. It's something human beings have been using for centuries, I would say, for the more diverse purposes, starting from financing public buildings, public roads, railways, statues, as well as helping people, creators, to pursue their projects. Academics usually tend to divide crowdfunding in 4 categories. So we have the donation-based form of crowdfunding, which is basically a sort of online philanthropy. So I can invest in a project, in a cause I'm really interested into. There is the reward-based crowdfunding, which is basically a sort of delayed e-commerce, if you like. So I pay for a good or a service in advance. Then there is the debt form of crowdfunding, which is peer-to-peer lending, which means basically people lending and borrowing money in exchange of a rate of return, of course. And then we have equity crowdfunding. Equity crowdfunding, equity crowdfunding is something which started in a form we know today after the crisis of 2008, and in particular it was a way to cope with the credit crunch which followed the financial crisis in 2008. Basically, entrepreneurs promote their entrepreneurial projects via online marketplaces, so asking for people to buy a share in the company. Over the span of the last decade, equity crowdfunding has grown as we can see in this slide, which summarize, if you like, the whole alternative finance realm, which includes all the types of the form of crowdfunding I mentioned, plus the sub-segments. And as you can see, this is a slide from the Center for Alternative Finance of Cambridge. It clearly emerges that equity crowdfunding, it is worth $1.5 billion and equaling a 2% market share globally in the alternative finance market. Considering the world market and focusing on Europe, there's been a recent study from Blasek and colleague in 2020, and they found it out that equity crowdfunding, it equals 5% of the market share This includes, of course, the entrepreneurial finance market includes banks, venture capitals, and business angels alike. So 5% is something which tell us that crowdfunding is there, is growing steadily. As we can see from this slide, which focuses on the UK, the British market. So we can see an upward trend starting from £4 million in 2012 to reach almost 400 million pounds, and this means that basically the UK owns almost the 50% of the European market. Now, nevertheless, and despite of this upwarding trend, equity crowdfunding presents some issues which have to be fixed in order for the industry to thrive and to continue to grow. Researchers have focused on several issues. For instance, I have just created a selection of the main issues in the segment. For instance, there is a reputational problem. If an entrepreneur fails in raising funds, it is really likely that he won't succeed in future rounds. And this is something which emerges particularly from my research, for instance, because people, so retail investors, are used to look at the track record of that entrepreneur. So failing a campaign could constitute a problem for future rounds, as well as to access the capital markets. The other way around, there is a problem with overfunding. So an entrepreneur is really successful in raising funds, and let's suppose he or she was aiming to raise 10, and he or she ended up to raise 100. So the problem is that they don't know usually what to do, how to manage those 90. This is the reason why, for instance, an investor I interviewed told me that successful entrepreneurs should allow themselves just a microsecond of joy when they are successful in a campaign, because it's from that very moment that problems begin. And this is the reason why, for instance, there are platforms delivering new strategies, for instance, allowing angel investors to lead the rounds, and so applying what is called a syndicate model. So the angel investor can enter the round, lead the round, and in the post-raise phase of the campaign, the angel basically will sit into the boardroom as a non-executive director, helping the entrepreneur to become a CEO. Another issue is related to the huge information asymmetries present in this kind of context, which is something pretty common in online context. So in particular, there are two types of problems. The one is the adverse selection issue I mentioned here, which is related to the pre-raise phase of a campaign. And then there is also a moral hazard issue. So what entrepreneurs are willing to do with that money, that amount of money they've raised. So this is a problem because basically investors cannot detect the quality of the entrepreneurial project. And this is a limitation for the entrepreneurs and the communities to make the most of this experience. And this is particularly what I'm investigating in my research. Then we have additional problems. For instance, generally speaking, equity crowdfunding investors are passive investors. So they pledge in a company, in an entrepreneurial project, and that's it, end of the story. And this could constitute a problem for entrepreneurs because they will be lacking networks or additional business development opportunities. And so basically the community is passive and the entrepreneur will face problem in scaling up the business. In terms of costs, in terms of business opportunities. We'll see later on what this means practically. Then there is a problem of lack of liquidity. Investing in a company, it means that you put your money into the company and that's it. Until the investor, the entrepreneur will exit. So will sell the company or will go through an IPO process. So through an initial public offering process in order to be publicly listed in markets like the London Stock Exchange, for instance. For this reason, there are platforms developing secondary markets. It is something still in a beta phase, if you like. They allow investors to trade with their shares in a specific moments in time. For instance, seeders allow crowd investors to trade shares on Thursdays. But it is something still in the nascent phase, so nobody knows how effective this can be in the future. And then another problem is plagiarism. So being a public context where an entrepreneur will advertise his entrepreneurial project, is really easy that somebody else can steal the project and the idea and improve that idea without any consequence. So nevertheless, equity crowdfunding has been successful so far, and there is a reason why for this, and it is in the role a community can play. Researchers argue that there is much more worth exploring in crowdfunding than just an alternative way for raising funds, and it is all about participation and social engagement. So in other words, it's a way to create a community of interest around the entrepreneurial project, because what emerges from my research, for instance, is that there are extrinsic motivations, for instance, in investing in companies, which means basically people look for returns on their investments, but at the same time, there are intrinsic motivations, and people is interested to be part of a community of an entrepreneurial project. And this is the reason why equity crowdfunding is considered a highly relational form of entrepreneurial finance. But focusing on the role of communities, why communities are so important, there are several reasons. For instance, there are political reasons, there are brand reasons, there are business reasons, marketing reasons. For instance, focusing on the political side of the story, following the 28 financial crisis, people started to be more involved in the business creation. Of course, they asked it for a more inclusive form of society. They asked for a more inclusive form of society, a fairer form of society. I want to be clear here. Of course, crowdfunding and equity crowdfunding cannot solve this problem. This is something which is absolutely investigated by rockstar economists, I would say, like Stiglitz, Thomas Piketty, Mariana Mazzucato, and the likes. Here, in this context, this means that basically people want to be part of a value co-creation process. They want to be seen not just as passive consumers, but they want to be part of the entrepreneurial process. And they do that by validating the project, so investing in the project, so allowing that project to exist in the market. From a business point of view, as mentioned, customers want to be seen as partners. So, and this is the reason why there are platforms like Crowdcube, which stresses this element. So people want to invest, and this is something which also emerges from my research. People want to invest in companies whose values resonate with them. So this is really important, and it can be related to the first point of people empowerment in society. This mechanism of trust and identification in a business because of the values can also have an impact on the brand equity, I would say, the reputational capital of the venture as well. And the reason why is that communities can help the brands to grow. And so the attraction of that specific project can grow, and so the entrepreneur can successfully scale the business. This is really important because, for instance, the Global Entrepreneurship Monitor found out in a recent survey that 99 plus something % of companies fail because of a wrong scaling. And the one of the reasons why is that the community behind the brand, because essentially entrepreneurs building new ventures are creating brands in the first instance, do not follow properly and do not contribute to that entrepreneurial process. So there is an asymmetry between the internal forces of the company and the external forces of the company as well. So now, in practice, how this works. Now, I would like to explore and to make this experiment, to explore these dynamics in a very practical way by using the business model canvas and using the direct quotation from an entrepreneur, using a specific business case to explore how entrepreneur can create this kind of holistic approach. So turning customers in partners in order for the company to grow in an harmonic way. The case study I would like to look at is Equity for Punks by Brewdog. Equity for Punks is an equity crowdfunding programs run by Brewdog. Brewdog is a multinational brewery founded in 1927 by James Watt and Martin Dickey, two Scottish guys, plus a dog, in one of the co-founders' mom's garage in an abandoned industrial area in Scotland. So they were targeting a specific segment of customer, which they called beer-loving punks. Why? They use this kind of denomination instead of referring to demographic aspects or lifestyle aspects, etc., but focusing specifically on a characteristic of their target. So they have to be punks. The reason why is that if we look into the proposition of the company, they aim to revolutionize the beer industry. So they wanted to redefine the British beer drinking culture, which means basically they aim to challenge the status quo. And in order to challenge the status quo, they needed to have punks, so people eager to go against the system. And the system for them was, of course, a specific industry. So the beer industry, a very saturated one, which they had to challenge in order to find their place in that specific world. And so if you look at the words of one of the co-founders, James Watt, he wrote, "When Brewdog first started, the UK beer market was all feeds in a flavor, mass-produced beers, and we demanded better. Manifest," so their manifesto defined Brewdog's brand communication, created the craft beer revolution, and positioned Brewdog as the leaders of change, elevating the industry. So they were trying to do something different. They trying to do something challenging, and this is the reason why they needed punks. And this is also the reason why, for instance, they hired a tank, which they positioned in front of the London Stock Exchange when they started this Equity for Punks project, in order to have, of course, media coverage, but to sell that message, which was, we are here to fight against the system. So in order to do that, in order to challenge the status quo, they needed to shorten the distance between them and their community. And in order to be on the same line, to be on the same page, fighting against a common goal. which was the success of the company, of course. So in order to shorten the distance in terms of relationship with their community, they thought about ownership. So allowing people to own parts of the company. So the company, the breweries, the website, etc. So in fact, they stated our philosophy has always been to shorten the distance as much as possible between us and the people who enjoy our beers, and Equity for Punks is the ultimate incarnation of this philosophy. And so we wanted people to own part of BrewDog, to own a tangible piece of our company and our brewery and our website when we launched it in online in 29. This is something which changed the whole story, because their focus was on the relationship between them and the fan base, basically. And so we don't have just investors, they say. We have a community of loyal and dedicated brand ambassadors, our very own army of evangelists. So basically, they, in a way, paved the ground for the business to grow and to grow their demand by whilst lowering the costs, and we will see later on in a minute. So the most important thing is that this project, Equity for Punks, helped the company to adopt that kind of holistic approach, because the beer-loving punks became partners of the company, being crowd investors. And they, the founders, I mean, really involved the investors as partners of a company. So what partners do? Usually they provide company with insights or other kind of information, or added value activities which can help the business to grow. So for instance, crowd investors, BrewDog crowd investors were involved in testing new flavors, in delivering new recipes, in suggesting new places where open new pubs or new restaurants. Crowd investors also helped the company to find the place where they built the first thematic hotels, so the beer hotel. So everything is about beer there in the US. So in this respect, crowdfunding has become a key activity. So not just a marketing activity of the company, but a key activity, part of the identity of the company itself, and so a key resource for the company itself. So I cannot see properly. Okay, here now I can see. So following the words of James Watt, he said, each feels ownership and each spreads the word of craft. So evangelists, perhaps the most effective marketing campaign with no budget ever. Now, I think this is a sort of meta marketing from James Watt, if you like, because running an equity crowdfunding campaign is something really expensive in terms of timing and resources you have to dedicate, human resources you have to dedicate to be successful. And it is something research confirm. So but the point is that James Watt was against advertising as a traditional form of marketing. And I think the reason why, apart from consistency with philosophy, with the philosophy of the company, is related to the fact that marketing campaigns, advertising campaigns are really costly. So, so this is the reason why I think he stated that this was a most effective marketing campaign with no budget ever. So Equity for Punks entrenched the BrewDog community and ethos. It was effective marketing precisely because it was not about marketing at all. Now, it is true that BrewDog started this campaign, I would say, immediately after equity crowdfunding started. So equity crowdfunding started in the aftermath of the financial crisis in 28. They started their campaign in 29. So basically the very first days of equity crowdfunding. so the perception of equity crowdfunding as a marketing activity, as a marketing tool, I can argue that could be lower compared to today. But it is clear that stating that because it was not about marketing at all, it's a way to say that they try to embed themselves within society and feeling what their society in particular was trying to tell them in order to foster their project, basically. So they ended up to build a community, and their competitive advantage in that crowded market. So in fact, they stated again, we don't have just investors, we have community of loyal and dedicated ambassadors, our very own army of craft beer evangelists. What's the clue of everything? The clue, basically, it is something called the network effects. This is something I would like to go, this slide is something I would like to go through with you, because it's a very recent study by Basgang and Bacon, recently published. So they are basically behavioral economists. And they say behavioral economics and psychological research have taught us that we fundamentally crave a sense of connectedness, belonging, mission, and meaning, particularly when performing our work. If a company can transition from simply delivering a product to building a community, like in this case, for instance, it can unlock extraordinary competitive advantages and both create and support a superior business model. And this is something they really did, Brewdog, I mean, because the enthusiasm of their customers allowed them to have ambassadors, evangelists, and so to acquire new members within that community, so lowering the cost of the acquisition costs by leveraging basically what I could call a guerrilla approach. So they made the most of the virality equity crowdfunding helped to have in this kind of context. Let's think, for instance, about Monzo, Challenger Bank. They were able to raise funds, millions, in a matter of seconds. So 90 seconds, I remember, for the first campaign worth £1 million. So because they leveraged at their max the virality an equity crowdfunding project can allow. They also, back into Brewdog, having a loyal fan base, they also can improve the lifetime value of their offer. So their products, their services, their experience, I would say. And this is an impact on costs as well. And in terms of high gross margins and due to a lower cost of service. So this study, which is not related to Brewdog, it helps us a lot to understand what they achieved with their project. So this is a different way to go to these dynamics. But in terms of outcomes, what they did, this is a chart by Statista, from 2010 and 28, as you can see, they grew the company in terms of human resources because their operations grew worldwide. The shareholder community base passed from 1,000 plus to 97,000 people in 2018. Nowadays, that number is 120,000 shareholders, because they run an additional equity crowdfunding campaign in 2019, the 6th round of equity for punks. Their revenues grew from 3.3 million to 171.7 million pounds, and their EBITDA passed from 0.2 million pounds to 8.4 million pounds. So a huge success, even though we are still talking about a small company, because these are the numbers of a small company, but a very successful one. So one for the road to conclude this exploration. James would suggest entrepreneurs, whatever type of business you are in, you need to start building a community and start turning customers into funds. Without a community and without funds, a brand of a business is destined to be all too short-lived. Even with a small technique core of passionate fans, you can change the world. Of course, this is a very emotional statement by James Watt, but the sense here is that you can find your place also in a very crowded market like the beer market. And what I can tell you from my research, for instance, is that people do not tend to invest in projects like beers or restaurants or food in general because it's too crowded and it's difficult to scale. So even you are running this kind of business, you can find your place in the world by making the most of communities. And the message here is thinking about our business model canvas, how you can make the most of communities. You have to think about the relationship you want to build with your community. So you have to shorten the distance between you and your customers. And the reason and the way you can do that is basically being transparent in order to improve, and this is something which emerges from my research, for instance, improve the quality of information you share with your shareholders. And the reason why is that if you have poor quality of information, the quality of the transaction will be poor as well, and the market at the end of the day will fail, causing another failure similar to the one we have experienced in 28. So it's really important to shorten the distance, be transparent, lowering the kind of the level of information, the information asymmetries, and in this way, creating that process of identification, because what people ask ask entrepreneurs for is a transparency. They want to be part of the entrepreneurial projects. People interested in participating in equity crowdfunding and investing in startups, they are really aware, very aware of the fact that it's a risky business because, as an investor told me, basically investing in startups is a shot in the dark, one told me. It is, and this is the reason why entrepreneurs should be transparent in order to shorten the distance, create identification, and activate that positive virtuous circle, I would say. These are a few references for your convenience if you are eager to go through some of the materials I went through.